How do you do, ladies and gentlemen? I'm your host, Seth Julian. Welcome you to today's brief on December 22nd, headed in toward the end of 2022. We're looking at a nice setup in gold. Now, this is the Fibonacci retracement drawn from the high of gold, which was 2075 or so. It was 2075 on August 20th. This is the depths of the plague after it hits the Western world in March, and things are looking bad. Gold hits $2,075. And it hits its low in this up till the present time at about 1630, and this is the end of October. It's now broken past, and I want to this down, make this a little bigger so you see the colors a little too much of these days. The end of this blue line is the 38% Fibonacci retracement, and you can see that this is holding steady above. That's a great sign. Here it is. Now it's finally in the right perspective with all these damn colors. It's too much to. Oh, and I screwed it. How do you like that? Hold on. Move it down. Oh no, I didn't. Not that much. A little bit. You want these Fibonacci. When you do Fibonacci, you want the lines drawn pretty exactly as you can. And his a little. Here, that's it. Let's see if I can do making a mess. Anyway, all we need to see is this. See, it's above the line now for 1, 2, 3 days, and now it's well halfway into the zone. This is the Fibonacci retracement, the 38% level. Here's the 50% retracement. In other words, now the current price is 1824. Once it broke through 1801 and stayed above that, which it has, it's going to go to 1854 as the next the resistance zone. So this looks like a very, very good buying opportunity. I want to note that the commitment of traders report shows us that the commercials, the large speculators are increasing their longs. They're increasing their long position. That's a good sign. That's a slight reversal in the last week or so. So they seem to be getting on board. The only discouraging factor here is that volume is dropping off. But that's probably, in my opinion, due to the Christmas season. I mean, it's December 22nd already. I mean, people are out shopping or just done, and volumes are thin all over the world in all the markets. So that indicator is less than, but the commitment of traders report uptick. And these guys apparently aren't old gals too, but there aren't too many women in this business. They're at their stations buying, going along. So that's a good sign. The volume is less significant in this case. What's most significant, however, for us is the price has now stayed above the 38% level for long enough time to make this have real legs. And that's the first good piece of news. The second good piece of news is this trade we've been working on now for 4 days since the Bank of Japan decided to reverse its loose yen policy and get with the program and start to raise interest rates and the cost of capital like the rest of the banks around the world. And this is when that happened. That happened on Monday. The correlation has broken down, but this blue line, by the way, is the US dollar index. So previously, as you could see, for a long, long time, they were highly correlated, 9.93 coefficient correlation. That's, almost 100, but close enough to 100. So now it's in the mid-40s, low 40s, mid-40, whatever. That's halfway to random. The zero line, of course, means no correlation whatsoever, and below the zero line indicates a negative correlation, which is also valuable. But when you're close to the zero line, that's a clear statement that one of the in this case it's the base currency, the dollar, is getting less directly correlated with the quote currency, which again in this case is the yen. This is the dollar yen chart, and this blue line is the dollar index, which is just overlaid. But this shows you the correlation between the two. And again, the volume indicators here are high. Volume is high on these trades, and so that indicates a certain sentiment. As you can see, slightly that light green line is the average of volume, is rising, and you can see by the point of control on the volume on price chart that we're headed back to where the at least the point of control, that is to say the mean in this data set, which goes back to the middle of October. Things are changing. And therefore, let me just take one look at something else. Yes, this doesn't change at all. This is the inverse. This is the futures contract in yen, so it's inverse because it's priced in dollars actually. But the numbers are about the same. But on this one, because it's the one trade in Chicago, I see the commitment of traders report. There's no valuable COT information here on this. So, but the setup on the yen nonetheless is just very good. and it's continuing. It's weakening again because of the volume drop off, but I wouldn't put too much consequence to that because of the season. So, ladies and gentlemen, that's going to do it for now. It's we've got a nice setup in gold, a long buying position setup, and a good continuing short position in the dollar yen. So that's going to do it. I'm sorry, I just give you the wrong. Yeah, this is, I mean, it's the same position, but this why it looks short, because this pair is what we're going short on. So, ladies and gentlemen, that's going to wrap it up for now. I'm your host, Seth Julian, wishing you all the ability to trade with confidence, ladies and gentlemen. Bye-bye for now.